So I think there's two types of inflation that we need to be aware of. One is this headline CPI-driven inflation that's being driven by supply chain constraints right now. That is different, and I don't think it really affects crypto markets per se. The inflation that drives crypto markets more so is the printing of money by central banks. And you can measure that by looking at the amount the central banks print and the effect it has on asset classes. It's actually highly correlated. And crypto does particularly well when the central banks are printing. Because of its limited supply, it has its scarcity value, and it tends to rise, but it also rises exponentially because it has this call option on the future element to it as we're building out this new technological world. So it works at two levels and works much better than most other asset classes for this debasement of currency that's happening.
And what if the central banks now doing the tapering and raising the interest rate? Isn't it a risk for the crypto market?
I think over time, I'm not sure how fast the tapering is still an increase in balance sheet, but just less of an increase. So it's reducing the balance sheet that would start to cause problems. I don't think we're anywhere close to that yet. My actual base case hypothesis is that next year, this big rise in CPI prices, commodities, goods and services, actually slows growth down. In a very indebted world, if you raise prices on people, they tend to spend less, as do businesses. So I think we actually will see slower growth and less central bank tapering or reducing of stimulus. So I don't think that's next year's story. If it is, it's the back end of next year. In the meantime, I think we'll probably get a bit of a growth scare during the first half of 2022, and that should continue, I think, to support the crypto markets.
Okay, so the inflation is not temporary, or the devaluation of our fiat currencies is going on the next years. That's, I can assume.
Yeah, I mean, on average, it's the central banks, and I use the G4, the ECB, the BOJ, the Fed, and the Bank of China, People's Bank of China, those on average are printing about 15% a year. Now, there's periods of time where they don't, and that tends to be not great for asset prices. And then what happens is they come back again. So I think it's an ongoing phenomena that will be with us for at least another decade because of this problem of debt and slow growth.
Okay, cool. So maybe let's stick to regulation or aspects of regulation. And we currently see tough regulation this year in all major countries to the crypto sector. And aren't you afraid that the states will regulate crypto innovations to death in order to keep control and maybe also to keep the banks safe?
They will try. And as I said before, it will be a battle that will not be finalized, probably in, let's say, till 2025, when we'll eventually have a set of digital asset laws as opposed to using the existing infrastructure. So there is going to be, I think, the feature of the second half of 2022 into 2023 will be regulatory uncertainty. Obviously, for institutions, it's relatively straightforward now. Most of them have an ability to buy Bitcoin and other things. The battle is for the retail market and the launch of the CBDCs out of the central banks. You know, Europe wants to get theirs launched whenever they can. The US is working on it, but is further behind. India is about to go. Singapore is about to go. Everybody's about to launch theirs. And what they want is to get everything in order while that happens, because what they're creating with the central bank digital currencies is not a competitor. They're creating the digital on-ramps and off-ramps. So they want to make sure that they capture what they need, which is their tax take, and to understand the KYC, AML elements. So I think DeFi has got a fight to come as well, because there's very limited KYC and AML, and that will be imposed in some way if you want to onboard and offboard via the central bank digital currency. Well, you've got a double-edged sword going on here, a double play. One side, they're obviously in Washington trying to slow down crypto adoption because it's a very disruptive business model. They want to slow it down because on the other side, they're all building out digital asset groups. Goldman has built them out. JP Morgan will be building them out. All of the banks are building out digital asset groups. So don't listen to what they say, listen to what they do. They're building trading, sales, advisory, everything. So I think they're just trying to slow it down. I think the bigger issue is not for Wall Street, but for the main money center banks, whether it's in the US or Europe, where what do they really offer in this world? I mean, particularly in Europe, where the banking system largely doesn't really work. It's the inability to get money around the system. And DeFi offers a complete change there. So I can understand that Europe's a little bit nervous because of its own banking system. And the small money center banks in America, 20 years' time, they won't exist. There isn't a purpose for them. But the investment banks will be at the center of this, as always.
Okay, so you can imagine a coexistence between the banks and the DeFi protocols?
Yes, I think so. Because, in the end, let's say you're a farmer in the middle of France or the middle of the US, you have a very distinct set of needs and you need a relationship with a bank who can understand your needs. That may not be built into or buildable into DeFi, i.e. the relationship side of banking. So I do think they coexist and the banking system adopts a lot of this, but does it in a way that helps onboard customers into it by pooling capital together and saying, we will help you integrate into this world. They will find their way of being the middlemen. They always do. I think central bank digital currencies are actually quite a breakthrough for many reasons, because we don't have monetary policy and fiscal policy is not very direct. You can't give it to people who need it, and there's always people in the middle, and that's particularly prevalent in the United States. With central bank digital currencies, you can exactly stimulate who you want. Let's say there's a huge flood in one part of Germany and people are homeless, and normally they might have to have a fiscal stimulus package, but now you could give money directly to those people only. So I think there's a lot of benefits. I think the central banks understand that the blockchain technology world is the future of the entire financial system and the digital world itself. And they need to integrate with it for the modern age, for speed of transactions, cheaper transactions. They're trying to increase velocity of money. So I think there's a number of reasons why they're still interested in this. I think it's also going to help them with their tax take and less leakage out of the tax system, because cash has more leakage than anything. So I think for them, it actually suits them. It'll increase their tax take, increase velocity of money, and increase the ability to stimulate their economies.
And with regard to the central banks, what do you think? Do we see first the digital euro or the digital US dollar from the central banks? Who will be first?
I think the digital euro, if we listen to Benoit Cœuré and a few others who've been working on this, if you listen to what the BIS have been talking about, it looks like Europe will be before the US. The US seems to be later. The issue in Europe, they still haven't decided, is it going to be a private sector initiative or a public sector initiative? Singapore took that decision and decided that the central bank is not in the technology business and therefore it should partner with the private sector. Europe's clearly not made that decision yet, but there's no way the ECB can hire blockchain developers. They're just never going to work for them. So they're going to have to work with the private sector. So it's still quite a few years away, I think, but they'll test stuff out first.